Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain.
Hello, everyone, and welcome to this week's Crypto and Blockchain Talk. And today with me, I have Rob Levy, who is the co-founder of Hero. Hero.io, and Hero is spelled H-X-R-O, isn't it, Rob?
It is. You got it right.
Hello, Rob. How are you?
I'm doing great. Bitcoin new all-time high today. How can you not be just singing from the rooftops? It just touched 45,000. So right now, at this very second, it's about 44,900. It's volatile. It's 44.7 now. It's moving, but we just made a new all-time high.
Wow, that's amazing. I mean, the fact that now Bitcoin is at 44,000 is pretty amazing. And it means that I made a prediction podcast a couple of weeks ago. And listeners, I might just have hit it on the button, but we're not going to brag right now about that. How's Doge doing?
Yeah, Doge is being Doge. It's been pumping all weekend. That too made an all-time high. It's about, last I checked, it was about 8 cents, which is actually remarkable for Doge.
Well, they can thank Elon Musk for that. Everyone raise your glass to Elon Musk for definitely giving a shout out to the good old Doge. Well, this week, what we're going to be talking about is DeFi. We're going to talk about DeFi in all its glory. Now, what we did was last time you and I were on together on this podcast, Rob, we were talking about GameStop and after that, perhaps, an endorsement of DeFi.
The fact that some certain things are happening in current events in traditional finance right now, definitely making people look elsewhere. And DeFi itself, it is the next generation of financial services. So people, it couldn't be more perfect that DeFi this last year has really matured and grown exponentially. So it's just perfect timing all around.
So what I'm going to do right now is I'm just going to give a very quick and simple explanation of what DeFi is. So DeFi is short for decentralized finance, and it is a term which encapsulates everything that has to do with crypto investment projects. And it's like Legos. And everyone describes it like this because it's the best way to describe it, where you can literally put together your own portfolio of financial products. So you can get some insurance, some savings, other investment things, and smack them all together. And you have this really beautiful portfolio, which you can then mess around with on a number of different protocols, a number of different companies out there in the DeFi space that you can pull together and actually then buy and sell and invest and loan and borrow and everything else you can think of, just like a bank. So the whole purpose of DeFi is that users can really invest money without having to rely on banks or take advantage of other financial instruments without having to go to large insurance companies or, again, to banks or any other kind of financial houses. And of course, DeFi has been giving people massive, quick returns. But there's also been some really big hacks in this space. As was seen in the beginning of last year, there was some flash loan attacks, and people who knew what they were doing, which we'll get into in just a moment in this space, they basically went in and without putting in as so much as 1 red cent, they were able to siphon out of the system millions of dollars, and then they exited with their money and no one ever saw what was coming. And that's because, it's a relatively new space. Now, getting into the DeFi space is not something that a crypto newbie can really do. It's not the simplest thing in the world. Of course, anybody can learn anything and do that. I'm not saying that. It's just a little bit more complicated still at this point than maybe other instruments of investment within the blockchain space are. Would you agree with that?
I would. I think your description of DeFi was generally right on point. I mean, it's basically just a replication of financial services that already exist, right? You mentioned loans, borrowing, you mentioned insurance, you mentioned savings. It's all of these things that exist currently that, you might go to your bank that you've banked with since you were little because your parents banked at the same bank. And with all of the benefits of decentralization and smart contracts, it's basically this next generation of financial services infrastructure and technology. And you were talking about people have profited greatly from it in a quick amount of time. And that is because a lot of DeFi is the tokenized part of DeFi, where if you're using one of these DeFi applications or services, a lot of times you're going to own that token. There might be a governance token. There's a token associated with it. And as though that specific application or service was starting to get used more and more, and people started finding out about it and liking that service, then just like other assets, they would go up in value, because it's like if you like a certain type of clothing and you just love it and you think it's the best yoga clothing you've ever worn, that's the only thing you'd wear, and you could buy the stock in it. Often people buy the stock in things they like and things they use. So these DeFi services and apps, if there is a token, an app token, an exchange token, or a governance token, then people would often buy that. And the usage of DeFi has grown so significantly in this past year that a lot of this network value that's being created is being created in these tokens. So yeah, there are people that have gotten famously wealthy on some of these DeFi app tokens and governance tokens. It's pretty remarkable. It's the benefits of being an early adopter and an early user.
Just like Elon Musk has foisted Doge into the spotlight, you
Yep.
have people like Mark Cuban who pointed out, and Mark Cuban, of course, being the billionaire Dallas Mavericks owner. He also appears on Shark Tank, the U.S. series that invests money into startups. He has been boosting everything about DeFi. He's been talking about the news that's been surrounding everything that happened with GameStop and Wall Street Bets. And he's been really talking about all the DeFi stuff that's happening in this space. And he really believes that it's showing strong potential when it comes to protecting and enhancing financial freedom. I mean, financial freedom is what cryptocurrency is supposed to represent anyway. I mean, it's kind of like a lazy way of saying, well, everything all of a sudden represents financial freedom. Do you think that DeFi gives you more financial freedom? Is he saying that it's ensuring more financial freedom because you have this freedom to put together what you want without using these traditional third-party institutions where you normally had to go in and give them a cut in order to do those savings services, those loan services, and the instruments of investment and in insurance where you're normally paying some kind of commission? Do you think that's what he's alluding to?
I do. I think DeFi takes what we've seen with Bitcoin, what we've seen with Ethereum, it takes it to the next level. It is the extension of real life use cases that go beyond, what Bitcoin was initially seen as, which is, a store of value and a mechanism for transferring value from one party to another without that intermediary, without that central institution backing it. So DeFi is demonstrating these use cases that they do give people more monetary sovereignty or freedom. They can do things that we've up till now had to do through the big banks, which is a savings account, which is taking out a loan, buying an insurance policy. These things have all been run through some of the biggest corporations on earth who, undoubtedly have all the lobbyists and they're tied to the governments and all of that. So the idea that these DeFi applications can be used from anyone, anywhere, and it makes this freedom you speak of a reality in a much larger sense. So I think Mark Cuban I'm very happy that he's seeing DeFi for what it is, and he really is understanding it. And I think the best part about it with Mark Cuban is that he's actually using it. Like he's used it. He's traded stuff on Sushi Swap, on the decentralized exchange. He owns Aave, the borrow and lending protocol. He's using it, which is really the only way and the best way for someone to truly understand the power of the technology. You got to use it. You can listen to what other people say, you can read about it, but once you use it and let's say you borrow money or you lend money and you actually get your interest payments and the whole transaction goes through and you see that it works, that there's nothing better than that. So I'm really when I saw Mark Cuban making those statements and then saying that he did own Sushi, the token, he owned Aave and he was using it, it made me a whole lot more secure with putting on more exposure to the space, buying more of the tokens, having exposure, knowing that, okay, first it's Mark Cuban. Mark Cuban happens to know media really well. The man knows how to promote his ideas, his businesses. This is a guy you want on your team. You want him telling the world how great having monetary freedom is and using these new technologies. You want that sort of guy on your side with the megaphone. A guy like that starting to get more active, it's only positive for DeFi and for the space. A lot can be said about Elon Musk, and when he changed his Twitter profile to Bitcoin last week, we saw a major spike in Bitcoin, like 20% in very short order. But my fear was that it would just be seen as some empty kind of shill or an empty why is Elon Musk putting Bitcoin in his profile? Well, then this morning we get the news that Tesla actually bought $1.5 billion of Bitcoin for their treasury. So that makes me extremely happy because Elon Musk it's not just talk. He's putting his money where his mouth is, and they're actually acting on their thoughts. And that is what we want to see.
Well, he's even gone a step further. He's going to start accepting Bitcoin payments for any of his products. So that is where, just like we were talking about last time, where the value of a crypto comes in. It comes in my definition, when there's an actual use of it. You see where I'm going with this?
Yeah, you're right. Some people ask about the use of Bitcoin. I'm one who I wouldn't want to use my Bitcoin to buy a Tesla. I mean, think about it. Let's say Bitcoin, when it was $10,000 and you bought a Tesla with Bitcoin, let's say the Tesla was $50,000. So you paid him 5 Bitcoin. How are you feeling today with your 5 Bitcoin Tesla? All of a sudden, that $50,000 car is now worth, at $45,000 Bitcoin, we're talking about $225,000.
But you can say that about anything. I mean, it's like going to your parents going, you should have never sold your childhood home. Look, it's now worth $4 billion. I mean, you can't do that with you have to have these cryptocurrencies. Okay, maybe not Bitcoin. Keep your Bitcoin nice and safe and lock it away underneath your bed. But you have to have some, I believe that in order for crypto to really hold in the mainstream and really gain more popularity with the non-crypto holders. Actually, this is going to segue quite nicely into what I was about to say to you. You have to have real-time, everyday use. But it goes quite nicely into the next thing, which I'm saying. Even for crypto users, the DeFi space, for some reason, is proving to be a little bit trickier to get into. I mean, even though there's like 35 billion now locked in the DeFi vaults, how do they get the non-crypto users to see this positive potential and really get on board with it? But if you can't already get crypto users and convert them in the numbers that they need to get into this space, how the hell they're going to get non-crypto users? I don't know. Let's talk about this for just a minute, right? As you alluded to before, you mentioned Aave. There's many different DeFi platforms. And if you go onto something called DeFiPulse.com, you'll see a huge list in front of you. And if you're going into this space, there's a whole host of top DeFi platforms which you are going to see time and time again. And one of them is called Uniswap. And this is where I'm going to start with the definitions. So Uniswap uses liquidity pools for their token swaps. Definition 1, what's a liquidity pool?
A liquidity pool is a pool of collateral. And Uniswap uses a 2-token liquidity pool for their swaps. So, for instance, if we're talking about the Ethereum USDC pool, which basically lets people trade from Ethereum into USDC and from USDC into Ethereum, you need to post both Ethereum and USDC to the liquidity pool if you are going to be an LP, if you are going to be one of the quote unquote, participants in their automated market maker. So it's basically the pool that you have to post your collateral to. And different platforms have different purposes, right? Uniswap is for swapping one token into another. So it's you have to post those 2 tokens. There's other borrowing lending where you might just have to post one collateral. But the bottom line is these pools of liquidity that you have to lock up, they are in a number of different tokens. A lot of it is done in stablecoin because stablecoin is, it brings along a lower amount of price risk at the end of a period. If you're gonna put collateral into a pool for 30 days and you put USDC in that pool, when it comes out, it's going to be the same amount of USDC, the same amount of US dollars. So you don't have any currency risk there. If you put Ethereum into a pool for 30 days, 30 days ago, Ethereum was probably $800 and now it's $1,600. So it's like you've got risk. What if you wanted to sell it when you had it in the pool? There's that currency price risk. Most of these pools have the main tokens. It's a lot of stablecoin and then a lot of Ethereum and wrapped Bitcoin, which is Bitcoin that's wrapped in an Ethereum-based token. And that's kind of the long definition of liquidity pool.
Okay, so we're going to break this down really simple for everybody. Why would users want to add liquidity to an existing pool or even create their own pool? What is the whole point?
My answer to this is pretty much one of the reasons that I think people are going to flock to crypto and to DeFi. And that's because in crypto, there is a real rate of return that is available in this market. And in traditional finance right now, this rate of return that exists, pretty much the risk-free rate of return, is 0. And in crypto right now, there is a risk-free rate of return that is much, much higher than 0. And if you are knowledgeable, if you are experienced here, you can earn significantly higher rate of return in DeFi than you can anywhere else on earth. And we are in this pattern here where yield is hard to come by in traditional markets and people are searching for yield. And the best yield right now is in DeFi, hands down. And that's why people are going to be learning about it. And if they can't do it themselves, guess what? They're going to pay people to do it for them. They're going to pay services to do it for them. There's going to be services that are going to be created just to do DeFi for people. Like, okay, give me your $10,000. We'll do it for you. Pay us a little fee and you'll be able to benefit from DeFi. Does it take away some of those basic tenets of DeFi, which is personal monetary freedom and you can do it yourself? Yeah, but why should people who aren't necessarily technologically savvy, why should they not be able to take advantage of real yielding opportunities here? And they should be able to. So I think that's what's going to lead the drive is real yields. You can't find it in traditional finance. There's $15 trillion that are earning negative interest. They're paying the banks to hold their money. This is what's going to lead the masses to DeFi, in my opinion.
Maker is another platform, and Maker has 2 main assets. One is Maker, the Maker token, the governance token itself, which is MKR. And then you have the DAI, the DAI, which is their stablecoin. And both of these are ERC20 tokens. And I should actually at this point explain that almost everything that is in the DeFi space relies on the Ethereum blockchain, which I don't know. How many Ethereum are you holding right now? If I were you and you think that DeFi is going to explode, you should be investing in Ethereum, but that's a different thing.
DeFi is Ethereum. Ethereum is DeFi right now.
Absolutely.
Yeah, there's no question about it. But there are some obstacles. It's expensive. I mean, like lately, more than ever, you're seeing that the gas prices on the Ethereum network are getting so elevated to where, if you want to make $1,000 trade on Uniswap, it's going to cost you $60, $100. I mean, that's untenable. We can't operate that way. You can't be paying 5-10% of the value of the trade that you're making in fees just to make it on the network. That's an issue. There's a lot of things being done to get around that, which is great, but Ethereum is the main network where all the DeFi actions going on, but there are a ton of other layer 1 solutions, layer 2s that are going to make DeFi on Ethereum much smoother, cheaper, and faster. But there's also other networks that are doing really exciting things that there's going to be DeFi on other networks as well. Ethereum won't be the only game in town, but it is definitely the leader by just leaps and bounds right now.
Maker, as we already established, generates this stablecoin DAI, and DAI is used in the majority of DeFi projects, okay? And if you could now explain to everybody why DAI is being used in the majority of DeFi projects and how Maker has enabled themselves to be used to create like a vault, and you can lock in your crypto collateral.
Now, one thing I'd like to know, and I've got to look it up, maybe we can look at the DeFi Pulse, but just how much I guess, quote unquote, market share the DAI stablecoin has right now, because, USDC is really increasing right now in issuance and in usage. We've got Tether on the ERC20 form. We've got other stablecoins, but DAI is basically, if Maker is the governance model, DAI is the stablecoin that you create in the Maker system. Its value is created to track the US dollar. So you are supposed to be able to think about, one DAI as being $1. The one problem, the one issue that could come about with DAI is that a part of it is collateralized with Ethereum. So if we see an event in Ethereum where, like we saw in March, like we've seen before, where the price of Ethereum has a shock and it goes lower really, really quickly, you can start to see stress in the DAI collateral system. And there's risk there. While DAI is this truly useful, brilliant stablecoin mechanism in hand with Maker and MakerDAO, there still is risk related to the price of Ethereum. And that, it can be problematic. Now, as the system matures, and when I talk about the system maturing, I mean, the system continues to mature, but we still see these systemic events like we saw in March with the crash of all kind of markets. You still do see those sort of black swan events happen. But you would think that as DeFi does grow and mature, there are ways to insure against that. You can take out insurance policies, you can buy puts, you can hedge yourself. In general, stable coins as smart contracts are really making a lot of things possible that were not in the past.
A lot of things are going to be made possible with this entire DeFi system. One thing which is interesting, though, is that an increasing number of these DeFi projects have this kind of Satoshi Nakamoto feel about, in that they are remaining anonymous, right? You don't know who's behind them. And some of these, or many of these DeFi projects, are centralized. So do you think that will be a problem to people who invest in these types of instruments? Because these platforms, you don't know who's behind them. And like I said, some of them are centralized. So is that something that people should take into consideration?
Absolutely. It is. It's not that it's a pain point, but it is one of the differences when you start talking about decentralized networks and decentralized finance. I mean, the first one would be Bitcoin itself. We don't know this person, Satoshi Nakamoto. We know that he owns almost 5% of the Bitcoins. Like in his wallets, there's about 1 million Bitcoin in there. We don't know if there's ever going to be a time where he's going to dump his 1 million Bitcoin. Nothing has moved thus far. Most people believe that nothing will ever move from those wallets, I should say. But this idea of an anonymous development team, it is very common in DeFi, and there is this added layer of trust. And we often need to get trust through looking at the code. Bitcoin itself and the Bitcoin blockchain, and then DeFi, it is completely transparent. The code is open source. You can go look at the code. You can hire people to look at the code. Anyone can see the code. Anyone can write to it. Anyone can use it, interact with it. It's something that you don't have to take someone's word for it. You can look yourself. So the fact that there is an anonymous team or anonymous developer, you can get past that through studying and through analysis and through other experts in the field that can do code audits, things like this. That really helps. If you think about other non-decentralized applications, imagine being able to look at what's behind the biggest casino and all their slot machines. I mean, I think regulators would have to be looking at that, but to be able to look at the code that is the basis for a business, it's kind of, they'd be like, are you kidding me? We're not showing you our secret sauce. You're nuts. Well, in DeFi, that's not the case. It's all there for you to see. So it takes extra trust, but it really just takes extra homework. And the people who are doing the homework and looking at these codes to know what they can trust and what they don't trust, those are the people who have really benefited the most from this major increase in value of this DeFi network as a whole. It makes you a little nervous when there's an anonymous team, but the bottom line is the code is the code. So let's see what the experts have to say about it. Study it. It's out there. It's transparent for everybody.
Everything to do with DeFi, it really needs a lot of homework. It's something which requires you, whether you're in the crypto space or not. And if you're not in the crypto space, it's still going to be a bit of a steeper learning curve, but you'll get there just the same. It won't be too hard. I don't think that this is the stuff that brain surgery is made out of, but you can learn it all. And the thing is, you're going to hear and you're going to read about everything that you've pretty much heard that we're not going to go into depth on this program, because it would be the longest podcast in the world if we went into what every single one of these DeFi platforms did. We kind of touched upon Uniswap and Maker. We talked about Aave. We talked about Wrap Bitcoin. But you need to do your homework and you have to really look into it. So let me ask this. Do you think institutional investors are also getting into the DeFi space, or do you think it's mainly the retail, the individual investors?
Oh, institutional in a big way. I think the biggest users of DeFi right now and some of the biggest beneficiaries are the professional liquidity providers who have experience in traditional finance, in traditional markets, whether it's fixed income markets, debt, or trading. These are the parties that are benefiting the most. This is the Three Arrows Capitals, the big successful fund based in Singapore. This is the Alameda Research, who's basically touching 15% of all crypto exchange trades. This is even the jump tradings of the world. The smart, big liquidity providers who cut their teeth in traditional finance, they understand this game. They're seeing the opportunity, the edge that exists there, these real yields. And these are the people who are locking up the most value. These are the people who are interacting with the applications the most. Retail users are definitely starting to take part. There's no question. But I do think that vast majority of the early leg is institutions, and whether you call it is someone who's fully concentrating in crypto markets. Can they be an institution? Absolutely. There's tons of crypto institutions who they might have a history in traditional finance, but now they're focusing all their resources in crypto. And these are the people that are, to me, anecdotally touching this stuff the most. And it's great. You need that sort of adoption. You need the people who were big liquidity providers, the big volume traders on centralized exchanges, for them to be leading the charge and using the decentralized exchanges, it's great. I mean, it becomes another touch point in their strategies, in their arbitrage strategies. If they can buy a wrapped Bitcoin for $43,000 here on Uniswap, and they can sell Bitcoin on FTX or Coinbase at 43,500, yeah, they should be able to get that arbitrage and do it all day. And that's what makes markets more efficient. And we need that institutional usage and adoption with DeFi. It's significant, and I think we're going to see it grow even more.
You already alluded to that a lot of this growth is only going to be happening when the blockchain is sufficient to operate at the scales and the volumes that this is going to need. There's a couple of barriers to the kind of adoption that it could actually reach. One of them, of course, is the educational threshold. One of them, which we've just alluded to again, which is the blockchain itself being able to operate at scale. Is there anything that you think would stop this kind of adoption that DeFi can't do that the traditional banking sector can?
There's a couple of things. One of the problems with DeFi is the idea of, let's say you have a problem. Who are you going to call?
Ghostbusters.
Yeah, exactly. Can you call your local banker and say, hey, I got a problem. There's a charge in my account that I didn't make this withdrawal. What happened? It says someone went into the bank and withdrew this money. Well, you got to take care of this. There's someone you can call in traditional finance. So when you're dealing in DeFi, it's that idea, well, is there someone to call? What can you do if you have a problem? What if you make a mistake? Then what? And that's an issue for a lot of people. Are these transactions final? And to this point, for the most part, they are. So there is risk. It's that same way where if you type in the wrong letter in one of your addresses that you're sending Ethereum to or Bitcoin to, and you send it, can you get it back? A lot of times the answer is no. So that's a fundamental issue that could make certain applications in traditional finance better. That said, there are a lot of things you can do in DeFi that you can't do in traditional finance. And part of it has to do with this lack of a centralized body. And there is no, for instance, identity verification for certain things that you're doing in DeFi, for trading, for even taking loans out. It doesn't really matter what your credit score is. If you can put up the collateral, you can get a loan. In traditional finance, that might not be the case. They might say, you know what, your credit score is too low. We can't service you. And that happens all the time. But the other piece is regulatory. Governments are very serious about certain things. And we are going to see over time, there's going to be a lot of change and regulatory evolution. How do we know that certain people using DeFi services aren't terrorist organizations that are trying to finance their operations, and that these are people committing terrible, terrible crimes and murders and bombings and stuff? That is something that government will not stand for. Money laundering, market manipulation, what type of surveillance can be done on DeFi applications. These are things that government regulators are taking very seriously, as they should. And it's important to keep in mind that we will see new laws, new regulations. Now, we are going to see regulation where they're going to want certain surveillance things done. They're going to want some rules put on these applications. And one of the beautiful things about blockchain, though, is that it is open and public and transparent. It's basically a database anyone can look at. So all the transactions, they're right there for you in plain sight. It just takes the right analyst to look at everything and start tracking it. You can look at suspicious activity. You can block certain wallets or addresses. You can put them on a blacklist if you know that it's affiliated with dirty money through real investigation on chain. So it's not all lost cause, but this is something that's going to be very fluid, it's going to change, it's going to be dynamic, and you can bet that it's going to cause some ripples in the market itself when you see certain headlines about rule changes and proposals of how to, put safeguards into DeFi. Because quite frankly, there's a lot of people who they don't want to see any restrictions at all. They want it to be fully open. But that, to me, it's not possible yet, I don't think, to have a fully open, no restrictions on the system. I just don't think that's going to stand right now. But you never know.
So Bitcoin's hit 46,000 a piece. And when we started this conversation, it was below 45. So all I could say is, we said it last time. What an interesting time to be alive.
It is. There's no better time to be in crypto and pushing the boundaries of decentralized finance. And it's the next generation of applications. And I think it is extremely positive for humanity in general. I do. I think this is opening up so many amazing opportunities that don't really have borders. I think it's truly exciting, and you're seeing some of the most powerful companies on earth taking it very seriously and taking part in it. You're seeing real adoption right before our eyes, and it is true growth, and it's happening on an exponential level. It's not going to stop anytime soon.
I agree. I would just like to remind everyone that nowhere on this podcast are we giving you financial advice. What you need to do is your own homework, your own due diligence, and if you need to get help, please find a registered professional financial advisor who can help you wade through all of this information, because you do have to do a lot of homework in order to really know what you're getting into. And remember, never invest more than you can afford to lose. On that note, Rob, as usual, I want to thank you for coming on to Crypto and Blockchain Talk. You are such a wealth of information. It is fabulous.
Oh, thank you so much for the kind words. It's a pleasure. It's always a pleasure speaking with you, and I look forward to coming back on in the future.
On that note, I would like to thank everyone for tuning in to this week's edition of Crypto and Blockchain Talk. We would love if you would tell your friends and family about our podcast and tell them that they can download us on the podcasting platform of their choosing. The entire list is available on cryptoandblockchaintalk.com. In addition, these podcasts play 24/7 on crypto24radio.com. All news, all podcasts, and even some crypto music. On top of that, you can leave us messages on the normal social media platforms of Twitter, Facebook, and Instagram, but we love to hear from you directly. That is our preferred communication method of choice. So to email us, please use the email of education@savvydigital.com. That's education@savvy, SAVII digital.com. Again, we know that you have a huge choice out there for you to listen to. So when you listen to us, we truly appreciate that you've given us your valuable time. So thank you again, and remember to be safe, take care, and goodbye.